Hi. On today's episode, we're talking to Erik Carey, who happens to be my business partner in apartment building syndications. We'll talk a little bit about his life story, where he came from, and how he got to where he is. He'll share some of his ideas on success and tenacity and what it takes to be successful when some others aren't. One of the other interesting points that we discuss is his past as a stock market insider, as a stockbroker. He discusses some of the things he saw in that line of work, like volatility and market manipulation by these huge institutional investors, and how he came to the conclusion that real estate was really his best move towards wealth building. And so I think, he came to the same conclusion as me, but he was actually an insider. And so I'm really excited to share his thoughts and share his experience. And I hope you get a lot from it today. Thanks. Erik, thank you so much for joining me. Uh, I'm excited because first of all, I know you, you're my partner, and we've done good things together. And on this show, which might end up being called, this is our first episode, so we
Right.
might change the name, but I think it's going to be called Fuck the Stock Market. And so I'm excited. I don't even say bad words, but really fuck them. And so uh I'm excited to have you for a few reasons. First of all, because you've taught me a ton about apartment buildings and investing in that space. So it's one of the most beneficial alternatives to the stock market that I believe in. But also because you come from that world. You're a stock market insider. And so maybe you don't feel the same way that I do. And I'm just excited to have you and kind of hear your thoughts on the topic. But please, I'll give you a chance to just introduce yourself, tell us a little bit about your background, and and we'll go from there. Take it away, please.
Sure. And congratulations on the first episode. This is epic. I'm completely in awe, and I think this is just a fantastic journey, and I'm happy to be a part of it with you. So, again, if I get too long winded, just cut me off.
Oh,
You're
I
welcome to
should
cut me
keep
off.
track. I should. I'm
Right.
gonna set a
Absolutely.
timer
I'm
because
going to keep track. But I'll try to keep it as straightforward as possible, and I'll try to go into some detail where I think it might be helpful to the listeners to really be able to benefit from the journey, the emotion, the disappointments, et cetera, et cetera. And I like to be as candid and transparent as possible, and so I hope that comes through to the listeners. So, having said that, my name is Erik Carey, and I'm a local Washingtonian. As a matter of fact, sixth generation Washingtonian. You don't meet many of us, but the part where my story gets interesting is, in my opinion, and I hope in the opinion of others, is I come from a divorced childhood. Parents divorced at age 6, and at my age of 6, and I have two other siblings, and we were separated. The girls went with mom, and I went with dad. It wasn't really my decision. Obviously, I was a 6-year old, but there wasn't much stability in living with my father, unfortunately. And as he was trying to re-begin his life, and that led me to spending a lot of time with my grandparents, my grandmother and my great grandmother, because my grandfather had passed away. So I was lucky enough to have an environment where it wasn't the traditional environment, but there was lots of love in the home, and that was perfectly fine by me. I didn't think I was missing out on anything. We lived in a not so great part of Washington D.C. At that time. Southeast D.C. wasn't exactly what it is now. Now it's the last part of the city to be renovated and gentrified. So now it's fantastic homes and condos and such. But back then that wasn't the case. So if at any rate, you as a child, you don't know the difference. As happy-go-lucky and just as feeling as fortunate as anybody else who was around. But at any rate, from that point, I was always pretty good in school. I always tried hard. I wasn't always the brainiac, but I tried really hard. I just had the work ethic. I just tried really hard, and when I was a kid, I always thought that others had it easier than I did, and that coupled with I don't want to get too off track, but coupled with quasi poverty, lower middle class income scenario. I mean, that really made for, as I was getting older, you start realizing those differences, as a young person, and you try to overcome those differences. So that's always been, I suppose, the chip on my shoulder, the motivating factor that I was always trying to overcome. And I was very competitive, because I was always in some kind of sport, whether it was football or track and field or basketball or something. Wasn't always the greatest, but I always tried. I thought I was the greatest, so I guess that made the difference. And so I was lucky enough to pass a couple of exams and be invited to go to a pretty prestigious small school in the Washington metro area, where there were all boys, and your tie and blazer and uniform, and priest and nuns, and that was, for me, that was one of the first times I had ever been in the same school for more than 1 year. So that made it interesting too, because that I finally found what I thought was stability and a brotherhood, and a fraternal order, which is what it represented to me, and it still does to this day, by the way. And I'm 50 years old now. So that was life changing for me, and all these young people were of various different backgrounds and communities and cultures, but it didn't matter. They were from all over the country. It didn't matter, and as long as you were a pretty good athlete, and I was at that point, that's all that mattered. So that was the equalizing and stabilizing factor, and it was just fantastic. Anyway, after finishing there, I ended up going to University of Maryland, and I have an economics degree and a government politics degree. My focus was international economics, with a minor in both Spanish and government and politics. So I thought I was headed to the foreign service to become an ambassador. Anyway,
And I'll
so
say
I
your Spanish is good, by the way.
well, it's not bad. I'm practicing, right? As a matter of fact, I'll come back to another story. I'm currently in Spain, and I'll come back to that in a second and tell you why I'm here, and
Very
and
cool.
how,
Okay.
how and how real estate has helped me to be here. But nevertheless, I'll come back to that in just a second. So I was able to get into with pretty decent grades. I didn't play sports after high school, but it gave me it was a catalyst to get me into a good environment. It was a catalyst to keep me competitive, et cetera, et cetera. And so I needed that. I didn't have any necessarily older siblings, males, and by that point I was sort of really separated from the sisters still. So I didn't have that closeness that I really wanted to, that I think most people probably have, siblings have, but just don't realize that how valuable it is.
Yeah.
So now we've been catching up since since college, but nevertheless, for just a long time, I had to rely upon that competitive nature. So I suppose it was just part of the blood. Maybe it was part of survival. It had to be. It was part of survival at that point, because I felt like I would be left behind. I felt like I wanted additional things, not always things that were material things, but I wanted more accomplishments. I saw my peers accomplishing things. I'm a musician, so I was in the band, in the orchestra over at the school, and I was playing on the football team and running track and field. And I was always with these guys who I thought were great. They were phenomenal. They were heroes. Many of them went on to become professional athletes and professional musicians. And I was just, in a crowd with some great guys who doing great things, and they all looked different, but it didn't matter. So that's at the core. I was fortunate enough, didn't realize that then, but I realize it now. Fortunate enough to be in that environment. So those are all my big brothers and all my heroes and my superheroes. So ended up going to University of Maryland, did really well. Uh, as a senior, I had an opportunity to spend a semester as an exchange student in Costa Rica. And so that was just phenomenal. So again, so now sort of what I'm trying to build here is a picture of all the really small accomplishments that help individuals to take action, and help them to be confident enough to take action. Because at the end of the day, I think the point that really matters in whether who's successful and who's not successful is not whether your parents have a lot of capital to support your endeavor, or you're a 4.0 student with a great SAT score. I think what really matters is that self-confidence. And I met people who don't have all those other traditional benchmarks that you would think would make you successful, but they're wildly successful in spite of it. And so that's what I'm trying to build here. So I didn't come from a fantastic intellectual background, although education for my family was not an option. You will get a graduate degree. It wasn't an
Yeah.
option. So and so at any rate, so
Yeah,
I, I
I've heard you emphasize a few times now how hard you tried, how you weren't
oh,
necessarily the most, raw, gifted person
right.
in all these different areas, but you had some hunger, you had some drive and something that really, I guess effort is going to be the driving factor. And I'll say my dad has always said, there's a
Really.
bunch of people who are much smarter than me, who are doing much worse than me out there. There's a
Oh,
bunch
good
of
point.
people who are much more talented, but effort is going to be the thing that's going to set us apart.
I love it, and he's spot on. He's
Yeah.
spot on. So I ended up after finishing University of Maryland. I came back from Costa Rica. That was fantastic. It was again eye opening. It gave me tremendous confidence to be able to speak a different language, live on my own with a family. It was I was really entrenched. It was fantastic, and from that point forward, my attitude was there is absolutely nothing I can't accomplish because my Spanish, when you learn book Spanish, it's different, right? So when you become submerged, it's really an eye opening experience. You feel like you're starting all over again. And so anyway, just to make a long story short, what I'm stating here is many small accomplishments that at the time during the accomplishment you don't think much of it, but when you sit back and you look at the chronology of events and you figure out that this is what has caused me to be fearless, or this is what has caused me to take action. It's those little things, and you have to learn to celebrate those. Of course, I didn't do it at the time, but over time I learned to celebrate those little small accomplishments because they each gave me the intestinal fortitude to continue. They each gave me they kept pushing my glass ceiling a little bit higher, just a little bit higher each time, to the point where there isn't one anymore. And so I think that's what's really important. So I returned from Costa Rica and didn't have a job, finished college, and didn't plan well, but felt confident that something would show up. Had a bunch of different small jobs, odd jobs here and there. And oh, and by the way, when I was 14, I had my first company. I had a landscaping company with my best friend at the time, and
Really?
yeah, I did. It was just really funny. We were washing cars and mowing lawns and shoveling snow. It was just we thought we were, the Rockefellers. It was great, have a few dollars in your pocket, but and you earned it the hard way, but it was fantastic. And I recommend that to anybody. I have 3 sons, and I have them doing the same thing. It's just phenomenal. It's those little things. So anyway, so had jobless, finished college, and looking for odd opportunities, and didn't have any so I thought any real skill that was transferable into a certain career.
Hmm.
And a couple of years went by, odds and end type of companies and positions, and a very good friend from college told me that he was applying for a position at a financial services company. And he said, Eric, it's all math based. You've always been great in math. Just come and just take the exam with me. I said, well, sure, why not? It wouldn't hurt. So it was actually it was the precursor to the Series 7 exam. And anyone who knows that world knows that the Series 7 is the license for stockbrokers. So, and there are several different licenses. That's sort of the entry level if you're going to be a stockbroker and actually trade stock on the retail side. So we took the exam. We both did well. He ended up going to American Express Financial Services, and I got picked up by Merrill Lynch in Washington D.C. And that was just eye opening. And I thought, here I'm in the interview, and it's just a funny story. I tell my kids this, and they just laugh at me. I'm in the interview, and I'm thinking I'm prepared. I rehearsed my lines. And I got my Brooks Brothers suit on and my wingtips, and I'm ready. And I go in, and it was the most laid back conversation I had ever had. It wasn't, in my
Wow.
opinion, it didn't feel anything reminiscent of an interview. And I had been practicing and getting ready, and literally the questions were do I have what it takes to succeed? All the questions. When I look back on it, all the questions had nothing to do with what I had studied in school, my GPA, my SAT scores. None of that. Didn't talk about my anything. What he wanted to know is, and I'll never forget, he had a stack of resumes on his desk. They were, I mean, you probably see them 2 inches thick, a stack. And he showed me, he put it right in front of me. And he says, I see people like you come and go all the time.
Wow.
What's so special about you? And, yeah, I mean, I froze like, oh my God, how do you answer that question? So I piecemealed some kind of response. I'm not sure what I said. I piecemealed something together. And at the end of the day, at the end of the interview, he said, sell me this pen. And he gave me a pen out of his pocket. I swear, it's the funniest thing. Clearly, he was watching some of those old black and white movies, of the salesmanship and everything. And I had to sell him a pen. It was a Mont Blanc pen with a blue tip on it, and I guess I sealed the deal. And in
Wow.
that situation, but at the end of the day, he's right. Nothing else mattered. What mattered was, in the heat of the moment, can you deliver? Can you, can you lean on all your experiences and appeal to me in such a way that you can be influential, that you can be detail oriented, even when you're sweating profusely and you're afraid you're going to make a mistake, can you still deliver? And I'll never forget that. And I think I've since left the job, 4 years afterward, but it was one of the best experiences I had ever had, working 6 days a week, cold calling in the bullpen. I mean, it was lots of energy, lots of young guys just like me. It was phenomenal. It was a phenomenal experience, and I couldn't do that. Was a major part of what I do now, and I couldn't do this now had it not been for that. So I'll go fast forward a bit, so I don't get too long winded, but the after that, left Merrill Lynch, started dabbling into my own financial services. Uh, couldn't gather enough customers and clients to really be a big impact. Started looking for other jobs to help me build, keeping my eye on what I wanted to do ultimately, which is help investors, find investments, figure out which investments are better, et cetera, and monitor and manage them. And eventually started taking some of my investors who were on Wall Street with me and doing one-off investments in single-family properties. And I noticed very quickly that it wasn't fast enough for me. Once doing one or two, it wasn't intriguing enough because the template wasn't, I guess, the type of properties I'm looking for weren't that intricate because we weren't building new properties, we were renovating existing properties. So after a
Yeah.
while, there's a template you follow. So it just didn't have the appeal,
So
although
was
we were
this
making.
before or after the bubble in 2008?
This is before the bubble.
Okay,
and
okay.
and so we were doing well, and I don't, maybe it was just luck that we were doing well because it was before the bubble, right?
Yeah.
I have my own bubble story too, by the way. So we were doing well, and they were getting great returns, better than what we were doing on Wall Street. And these were investors who already had pretty good portfolios. They were looking for something alternative, and so it fit the bill for them and for me. The problem I had was I learned that I was more of a micromanager than I thought I was, because I started to look at the deliverables that the contractors were providing to us and looking at the time frame in which they were providing it. And I was unhappy with both. They were getting the job done. Yes, we were selling the properties. Yes, that worked out perfectly well. But it wasn't my best product. It wasn't the best product. And therefore, I was uncomfortable continuing that route because if I'm going to put my name on it, it has to be stellar. It has to be the best we can possibly do. So I started a general contracting company and started doing my own renovations with employees and such, and that was fantastic. And it gave me the stream, if you will, that I needed to control to ensure that the investors were satisfied with the returns, that I was satisfied with the product, and that there was a win-win for the consumer who would then come and either rent or buy the property, and everyone was happy at the very end. And more importantly, I was able to deliver the product in a faster period of time, which
Mhm.
means there was less cost and better product and so forth and so on. So I try to give the customers a little bit more than what they were expecting. The customers in this case being well, there are two sets of customers. One is the occupant who's buying the property, and the other is the shareholders or the investors who are investing with me to buy these properties in the first place, my partners. So I wanted to make sure that everyone was able to receive more than they had expected. And in order to do that, I started a construction company. I don't know, again, knew nothing about construction other than those first couple of flips, but it ended up being a fantastic environment. So I'll fast forward
So
quickly.
real quick, Eric, I just want to say we're at 17 minutes right now.
Yeah.
And I think we're pretty good. We're at your adult life. We're about to make the shift to
Yeah.
multifamily. But
Good. Finally.
no, no, it's okay. That's okay. Um, so what was I gonna say? I was gonna just interrupt and say, time is one thing, and then maybe when we do make that shift, if we could go back and talk a little bit about what your experience was in the stock world and just kind of your overall
Sure.
opinion and why you left and why you felt you could provide something better.
Oh, that's great questions and great points. So I'll go back now and revisit that. So when I was in the market, when I was again Series 7 registered stockbroker on the retail side, what I found was the market was slowly shifting, and I was a new broker only a couple years in, but that's when fee-based money management services started to become more prolific. That's when the Charles Schwabs were opening up and they were offering, one fee or fee-based money management services, which prior to that movement, if you will, your stockbroker was compensated when he or she would buy or sell a stock for your portfolio. So at the end of the day, if your stock didn't go up, that had no impact on whether or not your stockbroker was receiving their own specific compensation for actually making the trade for you.
Mhm.
And there are always instances where some individuals don't do what's in the best interest of their client. And as a fiduciary, I thought it was always important to put my clients' needs before my own. My needs, I mean, I can't say my needs don't matter, but I'm in it to serve my client. So if you're not in it for that reason, then you're in the wrong field. Nevertheless, that movement was taking place, and mutual funds and all that business was cropping up. So if my client can take $1 million and just put it into a mutual fund, and that served their purpose, although they couldn't control what the mutual fund manager was investing in necessarily, but if they wanted to set it and forget it, to coin a phrase, then that wasn't my interest. I by that point I had become an SME, a subject matter expert, I think, and breaking down balance sheets and breaking down industries and really understanding the movement of the market and stocks, et cetera, and understanding patterns and how to use them to make money for my clients. So a mutual fund just wasn't appealing to me. So I had some conversations with some of my clients, and they agreed, and we tried to find other ways to be more involved, more hands-on, and receive better returns. There's something called an Ibbotson chart, and over the course of the year of several years, an Ibbotson chart compares the returns of all various asset classes, and real estate tends to do better than the stock market over the course of a number of years. So and incidentally, it doesn't have all the fluctuation that is prevalent in the market. Now, if you're a day trader, you want fluctuation. That's great. It's a different kind of market. That's not my market, and nor was it for my clients. We weren't day trading. We were trying to take on minimal risk and obtain obviously maximum return. So that was the reason we ended up leaving the Wall Street scenario and really going into hands-on investments like real estate.
Okay, okay, very cool. Obviously, I'm a big believer that there are better alternatives than the stock market out there. Um, do you agree with me when I say fuck the stock market?
Listen, I'm probably the only stockbroker who doesn't own stock.
Oh wow,
Lit-
okay.
Literally, I do not own stock. And recently, my oldest son has started. He was involved in that. What do you call that? That large short sale that occurred recently over the last couple of weeks.
Okay,
It,
okay. The
it was
GameStop thing.
right, sort of his foray into the stock. He'd been watching it for a while, and he and I had conversations about how the market really works and what influences it, et cetera, et cetera. And so he got a taste of it and made some money. And it's I had to explain to him, it's heavily manipulated, and because of that, it lost its appeal for me. Now, the part that did not lose its appeal is the skill of analyzing an asset, the economy, et cetera, how current events, interest rates, or what have you affect that particular asset class, and that's valuable. But in terms of investing in the stock market, it's not for me. I have in the past. It's just not appealing. I'd rather be able to somewhat predict my outcomes in terms of my returns by being heavily involved in the asset. I can't just set it and forget it. It doesn't work for me.
Hmm.
And for many clients it doesn't either. The fluctuations, they're unsettling. Some call, frankly, and I don't want to offend anybody, but in the industry, some would call the investors who get in on the retail side dumb money, meaning it's the investor who doesn't really know better, and they're sold on the idea of, oh, put it in your retirement account, your IRA, your 401k, or what have you, and just let it sit for 30 years. And then at some point it's going, it'll go up enough over 30 years where you'll make some actual money. Where the real money, if you will, the real money is not made over 30 years. It's made in seconds, it's made in days, and that's where the real money is made, where large tranches of stock are bought and sold with a penny movement or a fraction of a movement. That's where the real big money is made. And most of us are locked out of that marketplace. So that's where the
Yeah.
big institutional guys play. And for me and for many investors, I'd rather have something more predictable, something I can have a bit of control over, and be able to feel like I'm contributing and not just sitting back and waiting and letting others manipulate the investment for their own gain, and I end up with what they've left over. I think
Yeah.
this way we're doing much better. Plus,
Okay.
in addition to that, the benefits of real estate are, when it's a trifecta. Your compensation is a couple. You get compensated a couple different ways. You have tax breaks, you have write offs, you have income, you have appreciation. I mean, you're paying down your debt. I mean, the benefits are just tremendous.
Wonderful. Well, um, so it sounds like we're pretty much on the same page. I think you put it much more eloquently than me, and I've been taking notes, and I'm gonna um, probably the same message, but mine is a little bit more obscene, and yours is a little bit more precise.
Shock and awe.
But no, but that's good. Thank you for that.
You're
So
welcome.
we, we're we're making the shift, right? So we
Sure.
talked about a lot of the reasons why you don't like playing in the stock market. I think for me, the big key word out of that was it's manipulated. It's not a fair game, and now you presented real estate as this alternative that you've been working in, your investors have been winning in,
Right.
and um, but we didn't get to multifamily yet. You're about to make the leap, so catch us
Yeah,
up on that big leap, because
that's
that's
right.
a step that a lot of people. I think you talked about glass ceilings. That's another glass ceiling that a lot of investors, people, a lot of people own an investment property here or there, and they think someday, if I was a millionaire, I'd buy an apartment building. If I was rich, and so I think that's a big glass ceiling that's just something that you were able to overcome. So tell us about that leap, which I think is a big one.
You're right. It's a huge leap, and to go back and analyze the mindset. It was really a mindset of need for efficiency, and all I can say is it must be, in retrospect, it must be that competitive spirit and that competitive nature of that I have, that forces me to try to find a more efficient way of doing something. And oftentimes it is something just that small. That's my motivation. How can I do this more efficiently? Not that I don't want to work as hard, but if I can do twice as much by being efficient, and that's the icing on the cake for me. And I remember I was in a RIA meeting, and there were a group of speakers who had come through, and I'd always been a little hesitant about going to RIAs, after the first couple, because it seemed that no one was talking about the kind of things that I wanted to talk about, which was doing multifamily. And I also found that many of the individuals at the RIA club, at least in my experience,
Oh, if you could
were,
share what a RIA is, just
oh, I'm
in
sorry, a
case
RIA.
someone doesn't know.
Sure, RIA is a real estate investment club. REIC or REIA, Real Estate Investment Association, and they're just nonprofit organizations around. Well, I suppose they're nonprofit. They're just different organizations, a collective of individuals who all gather on a routine basis to discuss real estate strategies. Oftentimes, the presenter will come in and teach or educate you about various aspects of real estate to help everyone get started. And it's a great place to go and network and meet other individuals who are like-minded to help you fill the voids that you need to fill in order to be successful, or in order to pursue this market or this industry. And I went to a couple, and in my experience, I didn't find what I was looking for. I was actually looking for the next step, because I was looking for more efficiency. I was looking for demonstrable systems I could put in place. And what I found were most people were just flipping houses, and that was fantastic. It just didn't appeal to me. And I'd already been there, done that, and it just didn't appeal. So I was looking for something a little more interesting. And lo and behold, on one particular visit, there were a couple of speakers who had come through, and each of the speakers was talking about something different as it pertained to buying a single family house or buying a duplex or what have you. And so I'm politely listening, and because you can always find nuggets here and there, so I'm politely listening and trying to extract what I can. The last speaker comes up and he starts talking about large multifamily. Well, now I'm on the edge of my seat. I'm leaning forward. My eyes are wide. I'm taking copious notes, because this is exactly what I was looking for. I'm thinking, where has this guy been all my life? This is exactly what I need. And the way he outlined it, it wasn't as if it wasn't as if he was, one of these gurus who was trying to get you to do all the work and he takes all the profit, et cetera, et cetera. This was a guru. This is someone who was really, I could tell he was really giving you everything you needed. And of course I didn't know exactly what I needed, but it resonated with me. For some, he just seemed direct, he seemed honest, he seemed straightforward and transparent. He answered questions honestly and fully, at least to the degree that I needed it. And it was just phenomenal. And so after that, I took a couple of classes, and I never ended up getting a mentor, but I took a couple of classes that he had offered, and it took me back to my days as a Series 7 broker, analyzing balance sheets, breaking down the profit and loss statement, which shows all the income and losses on the property and expenses, et cetera. I mean, I'd already done all that. So for me, it wasn't a challenge. It was just looking at the numbers differently as they pertain to this asset as opposed to other assets. And then I quickly learned that you absolutely can increase the value of the asset. You can push the value if you want to do value add. You're almost flipping a building as opposed to flipping an individual property. And so then you take a step back and you go, okay, this process is outlined, it's methodical, it's easy to follow. But wow, where do I get the money to start? Where's that piece to the puzzle? But I didn't let that missing piece to the puzzle keep me from at least pursuing the part that was going to get me 2/3 of the equation.
Yeah.
So, I mean, there are those who need to have all the answers before they get started, and I'm not the opposite, but I'll try to fill in the blanks as I'm on the way. I don't build the bridge as I'm crossing it, but I don't wait till the bridge is built before I start running across. I want to get as much as I can and go in the right direction, and then kind of readjust your aim as you get to the other side. And that's what I did. And just being around individuals who were buying apartment buildings, putting myself in that scenario really opened my eyes. It was just a different world. I come from a community where people didn't talk about money, didn't talk about your net worth, didn't I didn't it was just foreign to me. And I'm sitting down having lunch with individuals who are just casually talking about the deals they've done or lost, or their net worth, and how partnering was the best thing since sliced bread. And I thought, oh, I'm in the right place at the right time. And Alex, there are only a few times in your life, in my opinion, when, if at all, when you feel like you are in, like when you feel like you spent the last several years preparing for this moment. I for the first time, that's how I felt. Like, wow, being on Wall Street and doing that business, and then doing the construction, having the construction. I was a GC for 20 years, and I was still a GC when I was meeting these folks who were doing apartment investing and so forth. So I was
I'm sure that's
bringing.
something that you could bring to the table, right?
Oh, absolutely.
You know,
And most of them didn't have the construction background. They were, hiring out subcontractors and GCs to do their work, and overpaying, right? Because they didn't really know. So here, I'm bringing this financial end to the table. I'm bringing the construction side, or major GC renovation stuff to the table. And I felt like, I mean, it was one of those eye-opening aha moments. Like, oh my gosh, are you kidding? I mean, it'll almost bring a tear. I don't want to get emotional, but it'll bring a tear to your eye, because you think you're in control. And philosophically speaking, we all think we're in control, right?
hmm
Some of us think that there's no master plan, and I'm not questioning anyone's belief, but I'm telling you, it was one of those moments where you just sit back and look at the sky and you go, oh my God, thank you. This is what I've been waiting for. It's what I've been looking for. I'm in the right place. I'm getting goosebumps now just talking about it, just talking about that moment, because it was one of those powerful moments where you just feel like, that everything came together at the right time, and you can't wait to dive in with both feet. And that's what I did. I didn't have time to question it. It just felt right.
How powerful, man. Yeah.
Yeah, it
No, that's
was.
huge. You talk about the emotion of the goosebumps and that. And it's it's so valid because we all get up and we work every day and we're living our
Right.
lives and we have one life to live, and to feel all of a sudden like, no, no, it's all been for something and it's
That's right.
all taking me in a direction. It matters. It's life and death.
That's right.
Um, and so that's exciting to hear. And I've been there with you.
Indeed.
And so I felt the same way. And so let's dive into some of your deals. Like what was your first multifamily kind of deal looking like? Because as you learned about it,
Yeah.
that's one thing, but then taking the leap into action is another, right? So
That's right. That's
getting
right.
your education is a very important first step for anyone. I've had
Indeed.
a lot of calls over the last few weeks with people who are like, okay, how are you doing this? Like, are you rich now? Like, what is this? And no, I'm not rich yet, not yet, but you can still take action. And definitely the first step for me was education, and it sounds like it was for you. But then taking that leap into action is still another leap, right? So
Indeed.
please.
Indeed. So once I understood the process and understood the nuances, and it's not complicated. It really isn't complicated. And as a matter of fact, larger deals are, and it sounds like it's not intuitive, but larger deals are easier to do than the very small deals. When you're buying one-off uh, single family unit, for example, it's intuitive to think that that's the best way to proceed and put your toe in the water. And I'm afraid to have this mortgage outstanding, and if my renter leaves, then I'm covering two mortgages if I own my primary residence also. And it's nerve wracking. But when you step out of that picture, and you look at it mathematically, if I'm going to lose a renter, or two or three renters, I'd rather have a larger portfolio than a smaller one, because it still balances out the income. I can still pay the mortgage and pay expenses, and maybe have some profit left over. Even if you don't have a lot of profit left over, you still have the comfort of knowing you're paying down your mortgage, and you have a little reserve on the side for whatever else may happen. There's insurance in place. Maybe you have a property manager, maybe you don't, but still there's that comfort. So I had to unthink, again, that the glass ceiling. And once I was able to truly feel confident that I knew enough of the process, of the potential pitfalls in the asset class, then I didn't need to know anything else. Everything else was just an additional small piece to the puzzle, but it wasn't a major piece to the puzzle. And so my very first, of course, I tried. I tried some. I was flying to various parts of the country, looking at deals, and having interviews with property managers and brokers. So you have to get your network started, and I was spending a lot of time getting my network started, And it was a full-time job in addition to being a general contractor at the time. So I was still working as a general contractor. So it was a full-time gig, but I was just loving it. I couldn't wait to get on my laptop at night and make relationships with brokers or attorneys or whoever I thought could refer me to deals. And I'm practicing running the numbers and submitting letters of intent, which is the basic contract, your offer of what you're willing to pay for an asset. And I was getting declined all over the place, and I just kept trying and kept trying to figure out the piece to the puzzle. I wasn't just trying for the sake of trying. I kept trying to figure out, okay, well, I offered X on this property. So if my offer wasn't accepted, then what is it? Is it the way I look at the asset? Is it the cap rate? Is it the income? Am I looking at the numbers differently? And the cap rate is just simply a number that's utilized by the banks and the brokers to help to justify the value of an asset. And as that cap rate goes down, the value of the asset goes up. It's just an inverse relationship between the cap rate and the price of the asset. So I'm trying to make sure I have these inputs so that my system, again, I'm looking for maximum efficiency. Just from 30 years back, I'm trying to be more and more efficient every time. So I'm trying to find ways to be more efficient so that my formula spits out the right answer every single time. And if it doesn't, then that means there must be something adverse occurring, like maybe it's an emotional transaction with the owner,
Mm.
and they just want too much money, and because they really don't want to sell it. And so begrudgingly they put it on the market to see what the value is. They mark it up too high to see where the numbers come in. Or maybe there's a pension fund which has a ton of capital, and they don't have to borrow money like I do to buy an asset. They're putting down, I'm putting down 25% equity and 75% debt, and maybe they're putting down 70% equity and 30% debt. So they don't have, so they can spend a little bit more on the property because they're not trying to maximize returns. They're looking for capital preservation as opposed to necessarily a lot of growth. So they might beat me out by being able to offer a lower price on an asset. So I had to factor in those things to the equation and just continue to keep going forward. And I learned that it's a numbers game. You know, look for the right markets, look for the right opportunities, and continually build your relationships with brokers and those people who can network with you, and also with investors. And there's a school of thought that, oh, just find the right deal and the money's going to pop up. Well, you need to look for both simultaneously, so that when the right deal does come along, that you found the right asset, then you can then marry the right asset with the investors and manage the asset. And also looking at the market too. Where's the asset where's the local economy in the real estate market? So there are several moving factors that you must monitor uh, prior to acquisition, during acquisition, and that'll help you decide when you need to sell or dispose of the asset. So there's so many different moving parts, but I love all of it. I love all of it. So anyway, you
So
asked
tell us about the first one. Yeah.
my first deal. Uh, Believe it or not, my first multifamily deal was 39 units,
Hmm.
and it was a deal that really, I say it dropped in my lap, but it dropped in. I got lucky because I think I was doing all the right things that I just described. I was analyzing markets. I was going to various different multifamily RIA groups. I was reaching out to those people who I thought had influence and what have you. And it was a mass email that was sent out to several people, and I was on the email list, and I crunched the numbers very quickly, and it just made sense for so many reasons. I made an offer. The seller was asking a bit high of a price, but it was about 15% overvalued, and which is customary, I thought, just the psychology of the sales process. And so I made a lower offer, one that I thought made sense based on the numbers, and it was declined. And so I thought, okay, well, that's interesting. And I had actually gone to the location and met with the broker and met with the seller. We had lunch. I thought we were connecting. I thought there was I thought it was, mutual respect, et cetera, et cetera. But at the end of the day, he's looking for the best price, and I understand that. So at any rate, I lost the bid, and a couple weeks later, I would check in just in case, because things always happen. As you learn, you never know. The bigger the deal, sometimes the bigger the problems to get it closed. And several weeks went by, and I just was checking in with the broker and checked in with the owner, and he said, "Oh yeah, everything is going fine here. Just we'll- I'll call you if anything changes." And I hate that, 'cause I hate to sit down and just wait. So at any rate, I happened to be driving down south, and I live in Maryland. And I was driving down through Virginia. I think I was going to Georgia or something to look at another property, and I passed by the exit that led to the property that I had just lost out on. And so I said, let me just call this owner. I'm just say, hey, I'm in your neighborhood. Just wanted to say hello. I'm just passing by, passing through. I did, and left him a message. Nothing special. Hey, just keeping in touch. Hope things went well with you and your buyer. Just I'm passing through, just calling to say hi. Left it at that. I get a call the next day, and he says, "Are you still interested in the asset?" To my surprise, I'm thinking, "Of course I am." But I'm thinking, yeah, but you didn't take my offer the first time, and it was a valid offer. So yeah, so immediately I'm thinking, okay, I'm interested still, but the price is going to be different now. I gave you my best offer before. Now I'm going to lower the ball a little bit. So I mean, he didn't take my offer. So at any rate, he says, okay, well, let's talk numbers. And so I gave him an offer that was about 10% lower than what I had initially offered him, and he took it.
Wow, very
And
interesting.
and let me tell you, I froze. Like, okay, what do I do now? Like, it wasn't supposed to happen this fast. So I was at least smart enough to say, let me give you a call back later today with the letter of intent, and we'll get it all drafted up, and et cetera, and we'll get things moving. I at least knew what to do when an offer was accepted, and so we did it, and the deal got closed. That was also fun because it was 39 individual units, and you had to do the inspections, all that kind of. That's all busy work as far as I'm concerned. I mean, it's a process. It's hard to go wrong if you do the process right.
Hmm.
It really there's a template you put in place, and you hire inspectors, and you check the books and make sure the numbers that you're getting are valid, and you look at tax returns to verify that the income and all that due diligence stuff. I mean, it's a process, but it's just that. It's just a process. You don't need to fear it. It's just a process, but it's a lot of stuff, a lot of steps. So nevertheless, we did all the process. We got to closing, and we've held the property. We've increased the value quite a bit. Did a lot of renovations in the very beginning, and to get it stabilized. Some of the occupants had to go because they just weren't good occupants. We lost about, I'd say, four to five. That's it. With a large portfolio, 4 to 5 occupants, we just weren't taking good care of the location. We put our systems in place. Again, I've been looking for systems all the while, so that when an opportunity came up, I could just plug and play. And so we found a great property manager to help us out on the ground. And so my responsibility became managing the asset manager and helping with all the big decisions and so forth and so on. It was just a fantastic opportunity, and we
Very
still
cool.
hold it today. It's great. It's performing very, very well.
It's funny that you mentioned that when he accepted your offer, you didn't know what to do.
Right.
Uh, because as a residential real estate agent, I see that a lot, right? I help first time buyers a lot of the time putting in
Mhm.
an offer to buy a house, and they want it, but at the same time they kind of fear that actually happening, because
That's right.
then it means there's an obligation on your shoulders. There's next
Indeed.
steps, and
Indeed.
so it's kind of ironic because yeah, a lot of times yes is the thing we fear the most, right? Thank you so much for listening to the show. It's a big step to realize that there's a whole world of opportunity out there for you. And then you've already started to dive into your education, which is required to be able to navigate the world beyond the stock market. But the next step is to take action. So if you want a chance to invest with me and my team, sign up for our investor club at legatoinvest.com/invest. We'll schedule a call with you, get to know you, your background, and your investment objectives. And if there's a good fit, we'll start to present you with live opportunities to invest in multifamily apartment deals. So again, legatoinvest.com/invest. Thanks again. I guess the last thing I'd ask is if you have any major message that you'd like to just share with our audience, with the world. Um,
I do.
yeah.
I do. I've given a lot of thought to this part, and I've watched a number of podcasts because that's how I supplement the education. And I've been to a ton of different RIAs, and and I've also, let me just step back for a second, and I've also. I'm also a coach, right? I'm not a real estate coach, although I do a fair share of that, but I'm a sports coach also, and I, a quick story that comes to mind is I was coaching a small little league football team for the Boys and Girls Club, and the team was called the Mighty Mites. They're 6, 7, 8 years old. They were just the cutest little kids you can imagine. The helmets look like little bobbleheads because they're running down the field and their heads moving, right? But I remember I had this kid who was on the team, and he was the tiniest kid you can ever imagine. And I was a little nervous initially that maybe he was too small because all the other kids were much bigger than he was. But he said, I asked him one day, I said, well, who's your favorite player? And he was like, he gave me a whole bunch of names, and they were all wide receivers, right? So I said, okay, well then you're going to be a wide receiver. And he said, okay, great. He was happy with that. And he didn't catch a ball all practice, right? I mean, he was terrible. And it was the funniest thing because I thought to myself immediately, he's going to be my pet project for the season. We're going to make
Mhm.
sure this little guy is successful. And so the season went by, and I would put him in. I mean, in practice, he would work hard. He would come early. He would do whatever I asked him to do. He didn't moan and groan. And we're doing wind sprints and push-ups and crunches and leg raises. He did everything he needed to do to be a great wide receiver, right? But he just didn't have that last piece to the puzzle, right? And so I remember it was the last game of the season, and of course he was like second or third string, but he started. I made sure that he was going to start. We're going to, one way or the other, we're going to end this season with this little guy starting, right? We already had 8 or 9 games throughout the season, and he was doing his part, but just never really a superstar. And at any rate, we put him in, and we made this play. We wrote this play and designed it around him. And we made sure we had the quarterback do a drop back in a shotgun formation to have a little more time so the O line could block the defenders and give him time to run his little route and try to get open and everything. And I remember the quarterback just launched it, and this little guy caught it. And
Oh man.
I don't remember him catching a pass all season, right? He caught this ball. Now he didn't score a touchdown, but it didn't matter. We celebrated that catch like it was the Super Bowl, right? And so I'm gonna try to tie this in, right? My point is never ever stop trying. Never ever stop trying because it makes the accomplishment that much sweeter when you finally get the accomplishment. And had I stopped trying, had the little guy on the team stopped trying, it would have never happened. And I haven't seen him since. Again, it's been years since I coached, but I'd like to know, and maybe even do some statistics on what kind of accomplishments he's been able to obtain since then because his confidence level was boosted,
Hmm.
right? He tried and tried and tried. For whatever reason, he tried and tried and tried. Whatever his motivation was, he kept trying and kept trying. Maybe he had I don't know, inferiority complex, and he just kept trying and kept trying. Or maybe he was being bullied. I don't know. And I hope it was positive and not negative. But the point is, he just kept trying for some reason. He never gave up. And then, we put him in a position where he could be successful because he's around like-minded individuals. And when he was finally successful, I tell you, it was, when he got to the sideline, I grabbed him, I picked him up, I hugged him. It was one of those moments where, you feel like you've changed the world. And in his eyes, we probably did, right? We probably did. So my message to anyone who's trying to get in real estate and larger deals is absolutely keep trying. Surround yourself around folks who are doing the very same thing that you want to do, not those who are trying to do it, the ones who are doing it. If you stay in that environment, you will absolutely accomplish it, and it's going to be the best feeling you've ever had. I mean, it'll 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 change everything.
And one thing I'll add too is, as someone who's relatively new in this world,
Yes.
I've found this group of people to be so welcoming,
Oh
so
yeah.
accommodating, and so willing to help you, right? I've
Yes.
done networking before in other circles,
Mm,
and
mm.
it's not the same. It's a bunch of people talking about how awesome I am. I'm the best. I'm
Right,
the
right,
best. I've
right,
done
right.
this, and I went to some fancy school. The real estate world, at least in this multifamily networking that I've done, has been full of very humble, good people trying to help you, and they're focused on how they can add value to you. And
Right.
so it's very encouraging. And I'll echo what you said and just encourage people to get in the game, network, and and start your education at least that way,
That's true.
and the doors
Very,
will
very
open.
true.
Yeah,
Very, very true. Just don't
Eric,
stop. Just don't stop.
thank you, man. It's a really good story.
Sorry, I'm a little
I already
long-winded
knew you
there.
pretty well, but I've learned a lot about you here, and I'm just very impressed again. And I'm happy to call you my friend, and
Oh, likewise,
I'm
likewise.
honored to have you as the first guest on this show. So thank you.
No, no, it's my honor to be here and happy to share. And I hope this 30 minutes, 40 minutes helps someone or help a whole lot of someone's to change their trajectory.
Well, thank you. One last thing is we didn't get to why you're in Spain.
Oh yes, I'm in Spain. Funny story. My talk about never giving up. So I have three boys, and they all play soccer. And the middle son wanted to become a professional soccer player, and he's a good soccer player, but he didn't. It's just like real estate. He's thought, well, I'd like to have a multifamily property, but I don't think I have what it takes to get there. So he had that same kind of attitude, and I kept asking him. He had a couple of friends who were playing in better academies than he was than he was playing in. I said, well, why don't you ask those guys how they connected the dots? And no one really had any real good information to offer him. So I just reverted back to what I do. I just figured, okay, let me just sit down with you. I'm talking about my middle son. Sit down with you and let's just figure the strategy, figure this thing out. How can we get you recognized? How can we do some marketing? So I had him prepare a highlight reel from all his games, and he's a pretty good player. But none of that compares to the big leagues, of course. But he's a pretty good youthful player. And so I said, okay, well, let's put together a highlight reel and let's try to reach out to as many people we can reach out to who are in and around the soccer game. Not those who are trying, but those who are doing it. Professionals, coaches. I don't care if it's the water boy. Let's he knows someone who's in the games. Let's reach out to everyone we possibly can. So we did that, and he admits to himself later on. He admitted to me that he didn't think it was going to work. It was just too big of uh, 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 an accomplishment for him to comprehend. So anyway, we spent about three or 4 weeks where it must have been every single night for about 3 hours until the wee hours in the morning. We were reaching out, emailing, trying to find coaches' email addresses, telephone numbers, organizations, just going on and on and on. And we talked to local MLS teams in the US. We talked to teams in Europe, and we just kept going on and on and on. Finally, we got a message back from a team here in Spain. Actually, there were two teams here in Spain, and so we thought, okay, this is great. Now this is step two. Now I got my offer accepted. Now what do I do now, right? So we told the coach that we'd be interested in a conversation, and he says, sure, absolutely. That's the next step. Let's have a conversation. Let's see if how serious your son is, and at least explain what to expect, and see if we have a match. And so we did. We got on, had a Zoom call, and my wife and I are sitting there, and my son is sitting there, and we're talking to this coach, and he's going through his own story of how he ended up becoming. He was a professional player. He got hurt. Now he's a coach, etc. And talking about the team and talking about Spain, the difference between soccer in the U.S. and here in Spain, etc. And we thought this was just a get to know you conversation. And to, again, like he said, to see how serious Cyrus was. I'm sorry, Cyrus is my son's name. And lo and behold, at the end of the conversation, we spoke for about an hour. At the end of the conversation, the coach asked us, when can Cyrus come over here to Spain, because the season's about to start? And we look at each other, and we were all floored. Like, we thought it was just a conversation.
Yeah.
And but he had seen enough of the highlights from the video we had sent over, and he had known enough about the school my son had attended and their school team, et cetera, et cetera. Couldn't find out he knew more about my son's high school than we thought. We didn't know he knew anything about my son's high school,
Hmm.
so high school team. So at any rate, he said, come on over, and we have a spot for you. And usually you come over and you get a trial. So you fly out, you stay there for a couple of weeks. They get an idea of how well you gel, how good your skills are, and they'll tell you in a couple of weeks, yay or nay, you can stay for a period of time, or no, you don't. You're not up to par, you can go. And they dismiss you. It's a machine. But uh, he came over here with an opportunity. He lives in a long-term stay dormitory environment with the team. They're in a bubble, so it keeps down the coronavirus issues. He practices every single day, and he's been here for 90 days, and he's gone from being, second string on their team to now being a first string player, which shows he's progressing. It's a whole operation, and so I'm
Mm.
here. Actually, I've been here also for 90 days, because it all happens so fast that as a father, you think, oh, this is my 16-year-old. Let me go and make sure things are right. And it's 4,000 miles away. So I just wanted to make sure that he had a nice transition, that it's all we thought it was, and it is, and then some. And just to be here and share some of the experience. And again, I wouldn't be able to do this had it not been for the real estate investments that we've made, because that has given me the flexibility to be here. And I'm still, while here, if there's Wi-Fi and a computer, I can still work, I can still manage, I can still look for other assets, and do the networking that I always do. So real estate has allowed me to help this young man pursue his dream. And I actually leave next week, so it's a kind of a bittersweet ending,
Wow.
but it's fantastic. I'm leaving him in a good situation. I've met the entire staff and all the players, and I've watched all his games and his scrimmages, and it's fantastic. He's right at home. So
And again, just for everyone, how old is he?
he's 16. Yeah, he
16.
just turned
And he
16.
just moved across the Atlantic.
Yeah,
Oh,
he did. And again, and the message for him, the message to other people his age is, again, remove the glass ceiling. And because many would be fearful to live away from home, and he's never lived away from his parents before. I mean, his older brother is, in a university, living on campus, but he's 18. So I guess but that 2 years is a big deal. That 2 years is a big differential.
yeah,
And from
definitely.
16 to 18, he's here. It's it's not as if he could survive without learning the language. It's everything at once. You throw him in the deep end and he has to swim, and he's doing just fine. So again, it's
Amazing.
just removing the glass ceiling and letting nature take its course, and trying to become more efficient. I give him the same messages that I hopefully have conveyed to the audience here today, that just remove the glass ceiling, put a process in place, and love the process, and the results will come.
Beautiful. Well, that's a really powerful message, and
Yes.
thank you, Eric.
Yeah, I appreciate you,
Again,
man.
I'm really honored to have you on the show and to call you
No,
my friend. All right, you take
my
care.
pleasure is mine. Pleasure is mine. All right,
All
talk
right,
soon.
now I'll stop recording
All right.
or pause
You're gonna ask me a
recording.
question first?
Yeah, yeah.
Okay. All right.
All right, Eric. So good checking in with you. We wanted to shoot this little video as a way of just kind of, for the benefit of our investors, catch them up. We're just over a month after we closed.
Right.
And it's a good a time as any to have a little bit of an update for everyone. And
Absolutely.
so yeah, so first of all, I guess I'd ask, well, you told me that there was the one vacancy right before closing,
Mhm.
and so you told me we were able to fill that one in, right?
That's correct. So we closed on January 15th, and we had one vacancy that we inherited, if you will. And that unit actually did not need any major upgrading, only small cosmetics. And we have a renter who's coming in, and that renter is going to pay our new market rate, which is 375 for that person. No, no, I beg your pardon. They're going to pay 450 because our strategy to anyone new coming to the property is that they would pay 450. And remember, the market rate is 5 to 550. So any newbies coming into the market will into our properties will pay 450, and any of the existing tenants who obviously are now subject to a rent increase will pay 375. And that
Okay.
375 will take place in the beginning of March, just in a couple weeks. So that shows a little appreciation, if you will, to the existing tenants, that we're not going to take you from 300 to 450 immediately. We're going to phase it in slowly. So I think that's enough to show the existing renters that, hey, we know you're paying a value that's under market. You know it too. We're trying to be fair and honest and transparent. 450 to any newbies coming in, and 375 for any legacy renters who are still there. And no one has declared that they're looking to leave the property. So I think it's well accepted.
Very cool. Very cool. So we're going to take those units and turn them into, we've essentially added $75 per unit.
Right.
So let's do some quick math here just to estimate how much value we've added to the property, or
Okay.
will have added.
Yes.
So here, let me pull up my calculator and clear. All right, so we start off with $75 per unit.
Right. Because the original price is $300 per unit. We're raising it by $75. Okay.
Okay, so and then 25 units because
Right.
total, and that equals $1,875 extra per month
That's correct.
times 12 months is $22,500.
That's right.
And then we divide it by the same cap rate that we purchased it at,
That's right. And that should be 7%.
and 7%. Yep.
Right.
And so that equals $321,000 of value that has been created, or that will have been created once we get those rents at that
That is
price.
correct. Over the course of 12 months, that is the additional value that has already been created by a small increase, what, 25% increase in the monthly rent per unit.
Very cool.
Very good deal. Very
And
good deal.
so I want to emphasize for our investors that this is cool because we win or we win big, right?
Right.
The risk of increasing the rents was that we might push away some of our tenants.
That's correct.
And what's exciting is that we've already shown that if we get a vacancy, we'll be able to fill it at even more, right? We'll be able to fill it for 450 pretty quickly. She did it it was less than a week before she found her tenant, right?
That's correct. That's correct.
So,
Again, and you and I had done a significant amount of research prior to acquiring the asset. So we had a very good understanding of the marketplace and of the demand. And again, we took samples from other competitors in the market to know what they're charging renters for equal assets. So in terms of age and condition, et cetera, et cetera. So these are the kind of things that we like to know prior to going into the marketplace so we can have a predictable outcome, or as predictable as possible.
and then the other thing I'd like to emphasize is the fact that all of the projections that we discussed when we were raising money
Mm,
were based off of getting to $420 per month.
that's correct.
And we are well on our way. It just, for me, it increases my confidence that much more. So I'm really excited. And
Oh yeah.
um, is there anything else that we would like to kind of update? I guess one other thing that the investors might not know is that we closed on the property on January 15th.
Right.
So logically, the assumption would be that we would get half of the month's rent. But our astute, hard negotiating leader here, Eric, was able to negotiate for the whole month's rent, which doesn't even make sense to me, but we'll take it. Um, how did you have that conversation, by the way, just out of curiosity?
you know, it, I just never stopped negotiating, and I always want the investors to get more than they had expected, and I always want the investors to feel comfortable under our leadership and our guidance. And I just kept going back to the seller. First of all, they kept postponing the closing. You know, the owner had contracted COVID, and he was in bad shape for a while. We were concerned, so we had to make sure there was a succession plan in place in case he wouldn't be able to sign during the closing. And just a number of hoops and hurdles. But it just goes to show that we have a pretty good management team in place, dedicated to the very end, to each other and to our investors and to the seller, and to the renters. So it's a win-win-win all across the board, and that's how every deal should be, a win-win-win across the board. We're all in this
Beautiful.
together as a team.
Awesome. Well, I guess I'm sure you agree when I say just thank you to the investors who put their trust in us, and I'm really
Absolutely.
excited that
Absolutely.
we're on track to make you some good money. So
Absolutely.
awesome. Well,
and
thanks,
and there are
Eric.
more and there are more deals coming down the pike. We always have letters of intent in the marketplace, and other deals are always being considered and analyzed. So um, don't be surprised if something else comes down the pike very soon that we can all enjoy together.
Yeah, I'll say that one of the ones that we were looking at that really tempted me was that 150 unit in Texas.
Yes.
It was tempting because the price per units was so low, right? They were selling them at about $20,000 per unit for 150 units, but it was still drastically overpriced because the property wasn't performing. It's in a market that was essentially suffering due to a suffering economy. And so we passed on that one, but it was tempting. It was really close.
Oh, indeed, indeed, and that's a day in the life of. We're sifting through probably 200 opportunities on a monthly basis to find a couple that kind of make sense, and then we drill down further into those to see that it checks all the boxes. So it's an ongoing process.
Awesome. Well, thanks again. And I guess we'll be in touch soon. And oh, one other question that I'm sure is very important is when are the first
Oh,
distributions coming out?
yes. So distributions will be on the third month. So was that April 15th?
So January, February, March, and then I guess we'll distribute in April.
Yes.
Okay, good.
Yeah. February, March, April. Right, right, right. So yeah, that's right. So April. We'll distribute April 15th. That's tax day. Easy to
Oh,
remember.
so you might get a refund
Yeah,
and then some other info
absolutely.
too. Okay.
It'll feel good if you got to pay a little tax and you get a little money back. That's
Yeah, I never get a refund. I always get I always owe. But anyways,
absolutely.
all right. Well, thanks everyone. And we're always accessible if you have any questions or if you want to reach out and talk. Okay. Thank you.
Absolutely.